Hi, everyone, and thank you for joining today's session on stimulus regulation, digital assets, and currencies. We have an exciting panel for you, and we're looking to get started very soon. But I wanted to just go through a few logistics before starting with the panel. And for that, I'm just going to share my screen here and go through a few slides. So first of all, like I was saying, we have an exciting panel, and the panel includes a number of great speakers from companies that we'll introduce you to shortly. Before we get started, I wanted to just talk a little bit about why we're here and the impetus behind this series of online events we're doing. And that is, especially in these times, one of the most important things that we can do is let each other know that we're not alone and that we are here to help. And that is what is the purpose of this series, is to share with each other so that we can hopefully help each other through this crisis. Now, the speakers talking in today's panel include Emma Channing from Consensus Digital Securities, Ruby from Polychain Capital, Clev from Women of Color in Blockchain, myself from Blockchain Intel, as well as Blockchain by Women, Carol from Luminous Group, and Danelza from Dash Investment Group and University of Liechtenstein, and the author of Crypto Research Report. Before we go into our panel, I want to say thank you to our sponsors, Dash, as well as Blockchain Intel. And to go into that, Blockchain Intel, I'll just go through a little bit of a background about our company. And that is, first of all, our customers and partners include a number of companies that you see here, such as exchanges like eToroX, trading desks like Reciprocity Trading, and other ATM companies, financial institutions, credit card companies that are using or supporting cryptocurrencies and digital currencies. We also partner with a number of regulators and law enforcement, such as the FBI, and other industry associations. So we're excited to be partnering with the companies and groups that are represented here, as well as on the panel and in future panels. We have a multi-coin approach, which is including Bitcoin, Litecoin, Dash, as well as ERC20, XRP, and other coins like Tron. And that is our differentiation with other companies in that we support different coins that they might. So the core of our business and the focus of our technology is on increasing trust. And we are enabling that trust through a risk scoring API so that companies can immediately score risk or provide risk information for incoming transactions and addresses associated with those transactions. To do that, we have risk scores for over 6,000 cryptocurrency providers, and we have risk indicators, which are pieces of information on hundreds of millions of addresses across multiple blockchains. So using this risk data, companies can block transactions or automate the record keeping and reporting for suspicious transactions, as well as track anonymity enhanced virtual currencies. So I encourage you to contact us afterwards about any questions you might have on that type of reporting. I also wanted to introduce Dash, who is one of our other sponsors. Dash Core Group is the foundation behind Dash, which is one of the cryptocurrencies like Bitcoin, Litecoin, and Ethereum. And Dash Core Group, unlike some others that you might know of, unlike some other cryptocurrencies that you know of, has a foundation that enables marketing and business development, as well as investment in very particular projects. And Danelza will be talking about some of those specific projects, as well as investments that Dash makes in particular areas. So at this point, I want to hand it over to the panelists to introduce themselves.
lots of interaction with them over time. And I moved into this space almost 2 years ago and was fascinated by it and was really intrigued by the fact that I could use my skill set and move into a different asset class. So that's what I do.
Excellent. And we do have one more person joining. I think she's just having some.
Can you hear me?
Oh, there you are. Okay.
I am still working on the video, but this is Carol Van Cleef. I wear two hats, one as the chair of the blockchain and digital assets practice at the law firm of Bradley, Aaron, Bolt and Cummings. And I also am the CEO of the Luminous Group, which is a company that is focusing on consulting, especially in compliance and training related issues in the blockchain space. And it's great to be here. Thank you, Karen.
Thank you, Carol. Well, thank you all for joining. So why don't we just jump right in? So we talked about the stimulus, and that's where I want to start with you, Emma. As a small business owner, what does the stimulus mean to you? What are you advising others should be aware of as you're trying to get stimulus and other loans in place?
I think, our experience, we bank with a major bank. We also use Gusto for our payroll. I think most people have been held up in the first tranche and are waiting for the second tranche to come through. Obviously, there's a number of changes that happened in the last minute that people should be aware of. Specifically, there's no longer a restriction on foreign-owned companies, so long as all of your employees are resident in the United States. That changed just before the first tranche opened. Secondly, you're going to have your forms 940 and 941 for all of last year, and that means you were paying unemployment insurance as well as paying federal and state employment taxes. I do want to highlight a couple of things which I totally appreciate for companies struggling in current circumstances. Your main priority is getting that money and getting it in quickly. But there are a couple of interesting things in the back of the application, in particular that the SPA can refer information they find on the applications you're submitting to law enforcement if they so see fit. There is also a warning that information submitted for the stimulus is subject to FOIA. And while they state that generally speaking, proprietary data would not be made available to third parties under FOIA, I think we are going to, particularly in this very litigious environment right now for a number of digital asset companies, we may well see that used in coming months.
Okay. And Clev and Ruby, Demelza, jump in if you can here. What are the current funding options beyond the stimulus, and are there things that could fast track digital currency type companies?
I can start. As Emma said, with the new bill that we anticipate passing soon, as most people know, the new stimulus, the Senate passed it yesterday, and the House is going to vote on it tomorrow, and that bill get reconciled, and the president indicates that he will sign it. There's an additional $310 billion for PPP and economic disaster, which is good. But one of the biggest problems was the fact that a lot of small enterprises did not actually get access to the funding for small businesses, which was a big problem. And I think I attended a lot of calls with members of Congress. They acknowledged the fact that for many small businesses that had probably less than 10 employees who did not have a pre-existing relationship with a bank and does not have an accountant, it was very difficult. So they wanted to make it, a little bit less challenging this time around. But I think the stimulus piece is very difficult because the challenge is reaching those who have been affected. And so there's a lot of how do you make sure that that happens, but also how do you ensure that small businesses, the engine of America's economy, if I can speak for just the U.S., is small businesses that employ less than 10 employees, and they've had the biggest challenge accessing PPP one. So hopefully the reboot will be much more effective. Full disclosure, I was able to apply for the PPP loan as a small business myself. I actually did it, even though I bank with Wells Fargo and Silicon Valley Bank, and I had a hard time getting through my lenders. I was able to do it through Lendio, and Ready Capital was the one that funded my loan and got it in the Wednesday the money ran out. I got an email saying that SBA had funded my loan. But I know many people who couldn't even get it through their banking institutions. So it's definitely a challenge, but I definitely encourage, especially startups, blockchain companies, to get your applications in now to make sure that you're in the pipeline.
And so Demelza, if you could add, I mean, what are options? And Ruby, you can weigh in here. What are other funding options? I mean, what is the funding climate like right now outside of these loans?
Well, the Dash Investment Foundation is still well capitalized. I mean, our terms are a lot tougher than the government's terms, so it's gonna, it's harder to get funding from us. We usually expect to make a gain on the money we lend you, but I think there's a lot. I mean, I have read that there are blockchain VCs that are pulling back right now, but from the Dash Investment Foundation's perspective, it's a great time because a lot of blockchain equities were pretty highly valued, 20 times EBITDA, and now this is an opportunity for those multiples to come down a bit, and we're still actively funding.
And if I can add, for small businesses as well, a lot of states and local municipalities are offering grants and loans to small businesses, as well as I know Google, Amazon, Facebook, they are offering small business loans and grants to small businesses. So I would say, really depending on your size, look at the different avenues beyond the federal government, because there's a priority in terms of resourcing small enterprises.
There's one point that, if I might address, that I know we've seen a lot in the press over the last few days about the some of the companies that have applied for these loans that have received them now turning them back because they may not be in quite the same position needing the funds. One thing to keep in mind is that if you have applied through a bank, make sure that all of your representations are correct, because in addition to everything else you have to attest to, there's also a provision in the federal banking code that if you lie to a bank, if you do a misstatement on your application, that in turn could become an actionable item against you under the criminal statutes.
Please listen.
Good to know. So Ruby, did you have anything you wanted to add there from your perspective at Polychain Capital? Ruby, if you're saying something, you might be on mute. I can't hear you. Okay. All right, we'll come back to Ruby later. So the next thing I wanted to move on to was really what are the top blockchain initiatives being discussed by legislators? So as we kind of move towards regulation and what's coming now in this climate, what are your guys' thoughts on what regulation is here, what's getting passed, and what's going to be top of mind for regulators?
I can start, you know, in terms of obviously legislators and regulators. So obviously for Capitol Hill, during the stimulus conversation, the whole hype around the digital dollar was the biggest thing that came about, and it really excited the crypto community. And you know, at the end of the day, the whole concept around the digital dollar is looking for an electronic cash payment infrastructure, but that doesn't mean crypto, and that's not what they mean. Even the bills that we've seen, Congresswoman Rashida Tlaib from the Financial Services Committee, and as well as Senator Brown from Ohio, who's on Senate Banking Committee, they've both introduced legislation around the digital dollar, creating these digital wallets called Fed accounts, but they're not crypto related. Even, you know, former CFTC chair Giancarlo did an op-ed, an editorial recently saying, you know, this is a long game, right? This is not something to be rushed. The conversation around Libra is recirculating, so I think that's going to shift focus to members. But I will say, when the country does open up, at least for Congress, they're going to be focused on, you know, a potential economic depression. So I don't see any legislation beyond what's been introduced moving through Congress. But I do think that, you know, in terms of the next January and February, we definitely will see some activity. In terms of some of the regulators, the SEC, the CFTC, we will definitely see action from them, because obviously, you know, there are a few things in the pipeline that they're looking at. So I don't know if anybody else wants to chime in, but I think the crypto community should expect a really tempered, you know, focus on crypto from Congress. I think that after this, I worked in the Obama administration. We came in and we had to stop the bleeding. We had to create jobs, and that's going to be the focus for this Congress come January.
So
that I really think that people oversaw that, and I think there's also some very real concerns here that, you know, the blockchain community should be speaking to, which is people tend to hold up the Swiss system as an example, but if something does go through that essentially is a nexus between the government's knowledge of you, your social profile, and your financial transactions, this is a disaster for privacy. And assurances that have been given so far that there will be a Fourth Amendment case law that develops around this, to me, is a little watery when we're talking about such very significant issues. So I think a CBDC in the US, at least, it is unlikely in the very near future, and I think needs to be carefully monitored, and comments contributed from the blockchain community about the importance of privacy. On the other hand, I do think you will see through Asia, and particularly Southern Asia, other governments rolling out CBDCs very, very quickly for those not particularly lovely reasons.
Hi, Karen. I just wanted to let you know I'm back on. There was an issue. This is Ruby. So if you need me to revisit anything, let me know.
Yeah, sure. So, yeah, Carol, did you want to follow that, and then we'll come back to Ruby?
Okay, so I was going to jump in and say that I think there are a number of issues, and I agree with the comments made by the two prior speakers on multiple levels. Is that obviously the Facebook Libra announcement the other day was very interesting for timing, that it's coming out now. They're ready to move forward. It's actually probably a really interesting time for them to go ahead and start moving forward, because they may prove to have some distribution systems that are parallel to what anyone else may have. And I think they've done a lot of hard homework over the last few months. So that's going to be interesting to watch, and I'm not sure it's going to run into the same kinds of headwinds in Washington, D.C. that the proposal ran into before, because they have been doing a lot of that homework. Likewise, people are going to be preoccupied as that moves forward. So that's an issue that's out there. It's interesting that the Financial Stability Board came out with a almost simultaneous with the release, actually preceded by a day or two, a 67-page paper that, if you read through to the fine print, says that global stablecoins should probably be banned or prohibited. How that's going to play out is another question. I think with respect to what, first of all, usually in Washington, when you're in election year, by the time you get to, certainly by July, you can roll up the streets because everyone's left to go home and campaign. That's not going to happen this year. There's going to continue to be a lot of action in Congress, but the question is, what kind of action is it going to be? How far will they go with respect to getting into issues that they absolutely don't have to get into? What that does is create a dynamic, I think, for the blockchain and crypto space on a couple of levels. One is that there may be a really great opportunity to get sow some seeds and funding bills to help fund further development of the technology generally. And I think that's something that people should be watching out for closely and exploring. If you've got a good project, there's also a lot of avenues to go into places in DC right now and have conversations and tell them what you want to do. For example, the control of the currency has been running several conversations over the last week and a half with fintech companies, trying to get a sense of what the fintech companies can bring to the table. And we have to include crypto companies within the definition of fintech for this purpose. And then, so I think between stimulus spending type proposals and looking for other kinds of opportunities to get in front of Congress with the positive aspects of the technology, whether it's in healthcare. I hear Emma on the identity solutions, and I certainly feel for those, but at the same time, we've got some really big issues that need to be addressed. And the blockchain community has been focused on that for quite some time. And then I think the last piece is the Telegram decision. And I know we're going to talk about that later. But that's something that's hanging out there. I don't think we're going to get just, sort of quick synopsis. We're not going to get any relief in the courts. So that means that the game's going to have to be played on the Hill. So that's it in short.
Okay, thanks. And going back to you, Ruby, since we're talking about funding, do you want to weigh in just a little bit about Polychain Capital's position there and what you've seen in the Valley, and Silicon Valley here?
Sure. So there's a couple things I want to address, just piggybacking onto what Clev had said earlier as well, that what I've heard about, just going back to the stimulus part, that it's like a stampede going through the eye of a needle. And unfortunately, I think what's happened is a lot of the bigger businesses have had access. They had the lawyers, the accountants, and everyone put together to go through the forms. And they also had relationships with banks. And I think the banks, from what I've spoken to several people, and they said it's the same form across the board. So whether you are a 10-person company or you have 400 employees, it's the same form. So in terms of the diligence and what the banks have to do, it's the same amount of operational burden. And also, if they have a longstanding history with the client and they know they're bigger, they're more willing to give them the loans. And so there's definitely some flaws in the system, as Clev was referring to. What we have been paying attention to is, if you're a startup and you are backed by a venture fund, how does that affect you? And that's one of the biggest I think problems with the bill, and they've been working on it, but I haven't heard too much about any changes. The fact that if you are VC backed, they will count all of the affiliates, and the affiliates would be not just the venture fund that's backing you, but also all their portfolio companies. So that could push you over the 500 limit. And so that's a problem. So at Polychain, we've looked at our portfolio companies and had to do some of the calculations and also look at the control mechanisms to address. Yes, can you hear me?
Yes, we just lost you for 1 second, but you're back.
Sorry, now. I'm definitely having a lot of technical issues today. So there's that. In terms of funding, you know, what we've been saying to portfolio companies is obviously this isn't the best time. It's not so much that there's a true liquidity crisis. It's a crisis. It's just that people are wanting to hold on to their funds and not investing as much. But you know, even when Karen, you and I spoke about it, we have seen funding of one deal where it was actually oversubscribed. And so I think if there's really compelling projects out there, you know, they're still going to be able to raise money, but the pickings are slim and people are obviously being much more careful. So what we're saying to portfolio companies is if you have to raise money now, then so be it. But if you can defer and manage and, you know, get these stimulus loans, or if you're big enough to do a Main Street lending loan, that kind of thing, which is less likely in the portfolio companies we deal with, we're definitely suggesting, and we've put together packages to send out to folks to just give them the information that they may not have access to. And so we try to do a lot of the a breakdown of the legalese and all the narratives around this stimulus package.
And so thanks for that. And so to go on to what's coming in terms of regulation in more detail, Carol, could you tell us a little bit more about what came out this week from the FFIEC and what you've been talking to bank examiners about? Do crypto companies have much to worry about? I mean, there have been questions in the past about whether banks know what ACH transactions are related or coming from or going to cryptocurrency related companies. Is that a concern on, you know, in the bank's mind, in the bank examiner's minds?
It's a great question, and I think it's probably useful to provide a little bit of background here. Is that right on the eve of consensus last year, FinCEN, Financial Crimes Enforcement Network, which oversees the administration of the Bank Secrecy Act, one of our key ingredients of our anti-money laundering compliance system in the United States. FinCEN came out with a very lengthy advisory to help both cryptocurrency companies, but as other types of financial institutions in their review of activity happening in the bank that might be related to cryptocurrencies. And the idea was that as I said, it could be used as a tool for the cryptocurrency companies when they're looking for potential criminal activity, criminal abuse, use and abuse. But it was also intended to be used by the banking industry. And then sort of fast forward to last December, the head of FinCEN, before a very large group of bank compliance officials, said to them rather point blank, if you don't think you have crypto activity going through your bank, look again, which is pretty strong language coming from the head regulator in that regard. And what that, those of us who've been in and around this for a long time, reading the tea leaves, that means, okay, they're getting ready to come in and start to hit the banks to see how good a job the banks are doing looking at the kind of crypto activity that may be flowing through them. Could be in the form of banking customers who are in the crypto space, and it could also be banking customers who are doing business with crypto exchanges. And that's where the ACH comes in, that are sending money to crypto exchanges or receiving money from crypto exchanges via ACH or wire. And then in January, early February, the controller of the currency took action against a bank, national bank. And in its enforcement action, really condemning the bank on all sorts of things. It ended up picking out its failure to do good due diligence with respect to digital asset customers. So now we've got 2 or 3 pieces that are coming up. And so for those of us who've been expecting that the regulators are going to double down in the examination cycle when they go in to review the banks every 12 to 18 months, that they would start to really look hard at what the banks are doing in this area. What we've been doing is watching very closely to see further evidence of that. This week, the Federal Financial Examination, FFIEC, Federal Financial Institutions Examination Council, released a periodic update to the Bank Secrecy Act Examination Manual, which is really the Bible for use not only by the examiners of the banking industry, but by banks itself and by a lot of other kinds of companies subject to the BSA. And interestingly enough, they left out any mention of this May 2019 guidance from FinCEN. The fact that it was omitted, to me, was quite glaring, because it should be something that's given the play that it's received, you would have expected it to be mentioned in this update, which is the first time in 4 years that they've done it, and they didn't. So I guess the short of it is we're expecting that probably the bank regulators are not going to be as fierce in this next round of examinations over the next 6 to 12 months. But it's also incredibly important, and I know this is very, very close to your heart, Karen, that the banks take advantage of this time to really work through their systems, their policies and procedures to make sure that they're buttoned down and ready when the examiners do come back. And that's one of the things we have learned. We learned from the financial crisis is that that you don't really get a break in this time period. They may not come down hard on you. They may not be in your face to the same extreme they have been in the past, but in the future, they're going to look back to what you were doing in this time period.
Right. And then things like the travel rule. Oh, sorry, Emma, did you want to add something there?
Yeah, I'm curious, Carol, what do you think of, I know several states have been considering speedy banks as part of what they're doing to stimulate local economies. What do you think of the Wyoming Speedy Bank and others, states that might be considering that as an alternative?
You mean with a bank charter that's less than a full bank charter?
Well, with a bank charter that's not FDIC insured.
Fully, right. So if it's not federally insured and it's only insured at the state level, it takes one level of scrutiny, or it takes the level of scrutiny down a level. You don't have a federal regulator that's going to necessarily come in. So the bank typically will have more latitude in what it does, at least as it would be allowed to by a federal regulator. Having said that, they don't get a break on the Bank Secrecy Act. Now, the question, though, is, okay, so they still have to comply with the same laws and regulations. The question is how much the state regulator is going to come in and will they conduct a level of review in the Bank Secrecy Act that will be the same level of review that would be conducted if they were looking at a federally insured depository institution? It's a fairly complicated issue, but I think that what I will say is that when we have seen differences in Bank Secrecy Act compliance, and there's been and it will raise concerns if the same standards are not applied, that FinCEN and the Department of Justice can step in. And that's the thing that the banks need to be concerned about. They've got law that they need to comply with, and they should, continue to comply with that law.
But I mean, there isn't a.
You're definitely puzzled.
It's only FDIC policy that digital asset companies shouldn't be holding FDIC insured bank accounts, to my knowledge. I didn't think there was actually a law breach there under the Banking Secrecy Act or otherwise. My understanding was just that it was policy.
Are you talking about the bank accounts themselves, or are you talking about the banks? Or the banks who hold, because they're not, they have a bank account with a FDIC insured bank. So your Speedy Bank has a bank account with a federally insured bank.
No, it doesn't. It would have access to a main market account, but it's not backed by through another regulated bank. Anyway, sorry, a technical question, a story for another day, I'm sure.
Let me take another. Yeah, we can go. But let's take another crack at this to maybe simplify it for everyone. Is that the bank, that Speedy Bank, a bank light, if you want to call it, that can do crypto business, is still going to be subject to the same standards for federal, for under the Bank Secrecy Act for anti-money laundering compliance that any other bank is subject to. It may be looked at differently by its regulator, and if FinCEN and Department of Justice feel like there's a gap that's too big a gap between how the laws are being applied, if there's arbitrage there, there could be implications. So that's what I want to sort of leave that. So, these banks aren't going to get a pass from these laws.
I don't think anyone's thinking that. I think it's more a FDIC policy issue that these Speedy banks are attempting to address, rather than actual law breaking. But anyway, a discrete point. Let's move on.
And so it seems like some of the things like the FATF travel rule that FATF put out last year in June are given maybe more time. So people have companies have more time to put the infrastructure in place, right, to adhere or comply. Is that would you say that's true, Carol, based on what we've seen so far?
I don't know if we need to provide the audience with any kind of background on the travel rule.
That's the travel rules. Yeah. So the travel rule, for those of you who don't know, I'll just give a very quick overview, and I'm sure you will provide a much better one, Carol. So FATF is a Financial Action Task Force, and that's a worldwide organization that gets together and agrees on how money should be handled. And so one of the areas that was talked about was in making sure that cryptocurrency transactions follow the same kind of rules that more traditional financial transactions followed. And so being able to provide information on the registration number of, say, the company or entity sending the funds, the address, place of business, domain name, and other details like that. So Carol, do you want to add to that in terms of what the travel rule is about?
Well, I think you did a great job summarizing it. A couple of points that going back to 2015, when there was the first joint action by the Department of Justice and FinCEN against Ripple, they made it quite clear in that action that the funds transfer rule applied to the crypto community. We saw early evidence toward 2015-16 of the IRS, which is responsible for examining for compliance in this area, of them coming in and starting to ask crypto exchanges what they were doing to comply with the travel rule. And in sort of the early days, the answer is easy, that we're supposed to collect information about the sender and the receiver. The sender is also the receiver. Therefore, since we're doing information on the sender, we have the information on the receiver. But over time, those business models changed, and it became a more sensitive issue as to whether we were really getting the information on the sender. I have Bitcoin, I want to send it to you. I'm going to do it through a regulated entity. They need to collect information about me, and they need to collect the information about you. And if we just happen to have an intermediate exchange between us, that information has to travel through that intermediary entity. And then FATF decided under the U.S. leadership back a year or so ago that it wanted that rule extended in every country. And that's what's led to this great debate about the FATF recommendation. And the goal was to see implementation by, I believe it was June 1st or July 1 this year. We have not yet seen any indication that FATF's ready to blink on that. I know we're getting pretty darn close to it. As a practical matter, is it going to happen? It's just not going to. And I think the other thing that's important for people to know is that FATF is the Financial Action Task Force is a body of I have 35 to 40 countries and super governmental agencies that get together and have come up with a series of recommendations and have been doing at this for 25 years now almost. What happens, they make the recommendations, but it has to be implemented by each country. So it really is a country by country process. The other thing I want to note is that I know there's been a lot of consternation, a lot of work that's going on in multiple groups globally to try to deal with this issue. There's been an open dialogue with FATF on that. I think FATF's getting a greater appreciation for how difficult it is to do this. And I think keeping those lines of communication open right now are the most important elements.
Good. So moving on to just some other questions that we have around here. And also at this point, for those of you in the audience, if you have any questions, please enter them into the chat and I'll be able to moderate and ask whoever is the best person to respond. But some other questions that had come in earlier from folks is, how do we for certain firms that do custody, now this is going on to more of the custody, or sorry, the security side of regulation. And so Ruby, this is a question for you. How do firms like yourself manage some of the new regulation around custody and what's the best approach?
So I can't really give anybody legal advice on it, but I can tell you what our thinking is, and I say that because that's my disclaimer. If you go on the SEC website, actually, we published a letter. I published a letter that the SEC put on their site for everyone to see, and we went through the litany of reasons why custody is such an issue right now. So for Polychain, we're an SEC registered advisor, and we're holding these assets on behalf of our investors. And usually in this space, whether it's with equities or whatnot, you have a traditional custodian. And now we are relying on other custodians that are big out there, like the Coinbases or Anchorage, and others. And it is a bit of a problem because we have a fiduciary duty to hold these assets on behalf of our investors and do so in a manner that is not going to be detrimental, and to do the best we can to ensure there's no loss. And the way the rules are set up right now with the SEC, it's like fitting a round peg into a square hole. It doesn't fit. You've got some old rules for a novel asset class. And so we've been working with the SEC, the FinHub task force, having multiple conversations. I think they're grappling what the issues are. And we can't, there are all these novel currencies coming out, and the platforms don't always they're not ready to custody those assets right away. So what does one do? There's self-custody involved. Even on the exchanges, as folks look at the exchanges and the platforms of like what they actually can hold on there, it's not that varied. If you look at Coinbase and others, I mean, they're doing much better than where they were when I first came into this asset class 2 years ago. At that point, it was literally just Bitcoin and Ethereum, and that's all people were, that was their platform. So we're still, I think we're a long way out on a lot of the regulatory aspects, and we're kind of at a standstill with this administration too. A group of us did go meet with the chairman of the SEC last, not this past February, but the year before. And it seems that, we were told that FINRA had a moratorium on this issue, and the SEC is not ready to. There's a standstill. People are in violation, but they're not really going to enforce on anyone. But at the same time, they're not willing to change the rules, and so I don't think Chairman Clayton wants to do this necessarily under his tenure. So we'll see what happens. But it's a weird uncertainty in the crypto community, because you just don't know where the rules are going, and like everything else. And so you live in danger of one morning you could wake up and someone at the SEC decides to enforce on this, or you're living in limbo until they actually are willing to make some changes.
So this is a question from Namatha. From your perspective, what opportunities do you see for blockchain smart contracts related initiatives outside of the stimulus in terms of grants and funding? And so I know we had talked about this earlier, as one of my questions was, is there going to be more lending that's cryptocurrency? So Jenny, do you have thoughts on that?
Sorry, can you hear me? Was this a question for me or to the group? You cut out.
Oh yeah, sorry. This is a question for anyone in the group. So
okay,
yeah. So just other opportunities, ways of getting funding, outside the stimulus. So do you guys think there'll be lending, that's more lending that's crypto based, or other types of?
Outside of government, you mean?
Yes, outside of government.
Yeah. Because I do think there's a lot more government money than stimulus money. For instance, at the Department of Commerce, there's an agency called MBDA, it's the Minority Business Administration. They actually have a grant program they just launched that's very innovation focused. And the GAO is actually looking at more innovation and crypto specifically as well. But I do think in terms of funding for crypto projects, if I'm hitting the question correctly, I do think people have to be realistic. Well, I shouldn't say be realistic. I think throughout 2019, economists were predicting a recession for 2020, and no one could have predicted this is what they meant. But I think startups within the blockchain and fintech space, there are going to be major challenges in terms of fundraising in traditional and non-traditional ways, going forward in the next few months, probably in the next few years. So I do think that people have to rethink about where their projects are at and look at non-traditional partners. But I also think that, going back to the regulatory conversation we just had, and even some of the funding piece, one of the biggest gaps that's occurred that has made it very difficult for progress on the regulatory side, or even on getting more clarity on funding or rules, is the lack of education. I think the crypto community we haven't done enough in terms of educating regulators, electeds, the public on this space. And going back to what Ruby was mentioning, in terms of some of these agencies are struggling because they are holding people accountable who never knew they broke the rules to begin with. And some of these laws have to be changed. But I think a lot of folks don't know how to apply some of these traditional systems and processes to, and it's not just crypto, but it's also fintech, it's also AI. So I know it's a broader concept, but I do think for the crypto community, we have to prioritize the basics. There's a lot more education that we need to do for the public, for governments, for leaders, even for funders, to understand, why there is these proof of concepts can actually scale in the long term and actually fuel the innovation economy. Sorry to take us off course.
Well, if I could follow up on that, great insight is that I think there's another piece to that too, is that There are a variety of government programs that are out there, but getting into the government contracting space can be difficult. So that if someone is looking at a potential government contract that may be of interest, the need to partner up with someone who already is qualified to do it is really quite critical. Also, making sure you're working with people who really know the government contracting space is likewise absolutely essential.
So this is another question from the audience. What is some of the current thinking in the continued wake of DeFi projects? Will FDIC be required? And this is referring to the 25 million hack over the weekend. Does anyone have any thoughts on that? Oh.
I guess I'm going to jump in and probably not answer that question specifically, as that depending upon, there's been a few issues around DeFi over the last several weeks. Certainly in the wake of the market crash and so on, we saw some very significant hits taken. I think it's an incredibly interesting time to see how the different models that people have been looking at play out with DeFi. Now, obviously, DeFi is also a very, very broad term, so narrowing in what we're talking about is important. But I think one of the issues that's going to come up is I think we're going to probably see more people looking at how DeFi, what kind of regulation needs to come in around DeFi. As long as the people that are taking the hit are within sort of a closed circle, we're not going to see as much conversation. But as we've seen with the OCC, we're seeing others calling for, hey, can we look to new technologies to do things in a better or different kind of a way? There's going to be a lot more, I think, people looking at DeFi. So it's one of those things that's an evolving issue.
Yes, I agree. I was just doing another talk last week about watching out for institutional fraud, but also just institutional oversight, right? There has been cases where, smart contracts were written a certain way that wasn't communicated exactly the way they were written, right, to customers. And so clients are unfortunately then left trying to figure this stuff out after they've gotten liquidated. And we were working late last year on a case where a lender looked like they might have, at least been able to manipulate markets. And it's not that hard with these coins. A lot of these smaller coins being, are having like a, few $1 million in market cap, right? It's easier to manipulate if you just have $1 million. And so if you were to liquidate $1 million, you see the price drop dramatically, and then that affects other lenders, and then we saw this happening late last year, but it kind of became even more amplified, in the March 12th sort of crash. So totally agree. There are a lot of things that we might want to look at doing. And I know we had a short discussion about Hester Pierce before, so I won't go into Hester Pierce too much, but I did have a short discussion with her around how maybe it's important to put into a policy, some rules in the smart contract that actually take these sorts of things into effect. Like if you see X, Y, and Z happening, then alert the consumer, or, the client has to see that kind of language in the policy so that they're protected, in the future. But yeah. So are there any other questions? I'm just going to do a quick check from the audience here. Ladies on the panel, do you have any questions for each other as we wrap up here? We do have, go ahead. Sorry, Clark, and I have one more question. Yeah.
Oh no, I was going to say, the crypto space has just been so exciting for me, especially over the last 4 years. But I do think, it's going to be exciting how things shift and how things evolve over the next year. And so with so much uncertainty, the crypto space is in its infancy. So I think people have to look at this crisis as really an opportunity, because it is an economic crisis. And at the end of the day, it has opened up this conversation around cashless payment systems, and having a tempered approach in terms of engaging these conversations and really looking at things from what are some of the solutions that are needed right now, that focusing on the problems, there could definitely be opportunity to shift the conversation around crypto, and not just on Capitol Hill, but with consumers and within some of the industries that are poised to gain from this technology.
So yeah, so to build on that, predictions. Sorry, go ahead.
No, I was just saying, again, an excellent point, and very well said. I much like, if we look what's been happening with around the virus generally, and the kind of data that's being generated, that's going to be fertile territory for all kinds of studies over the next several years, and probably for many years after this. I think what we saw in the DeFi market in the last 4 or 5 weeks is going to be just incredibly useful information. And I think people should be spending time looking at and analyzing and figuring out what the takeaways are that they can integrate it in, because I think we can emerge on the other side with some really compelling business opportunities.
So Demelza actually had a couple questions for the panel. Demelza, do you want to come on here?
Yeah, sure. Well, I did want to, I guess, ask a question that I think is relevant to the title of this talk regarding the stimulus. And I mean, basically, you kind of have two forces here. You have fiat currencies being devalued. On the other hand, you have people without an income. So, I mean, which force is going to win out? Is the stimulus market going to be is the stimulus going to be a good thing for crypto because of the devaluation? Or on the other hand, is it bad? Will the economic downturn overpower that devaluation of the currency? And I guess for me, it's interesting because I'm in finance, right? So we want to know like what direction the market's going. I'm not like asking for investment advice, but does anybody see any other forces or which one might win out?
I personally think that we need within crypto to stop considering it an uncorrelated asset. Bitcoin, at least, has for some time behaved in a way that was at least semi-correlated. So I don't think as crypto we can go, yay, devaluation, either as citizens of the world or even just basically from a valuation perspective of crypto. We all want to see more adoption, and that means higher correlation to real world assets and currencies. As to what's going to happen, having watched in 2007 the Japanese quantitative easing unwind and where that tail led, and having been watching things like the Turkish lira for the last couple of years and where we thought that would go out, I think you will see much tighter fiat currency controls coming out of this. And I think it will be a very interesting time for crypto. The blockchain industry has been, you and I are a great example. We're familiar faces. Most of us are familiar faces for one another. It's been such a small world for so long. And I agree with Cleve, we have not done a good job of educating. I genuinely believe we're looking at a financial contagion for upwards of 24 months from now. I think this is going to be very long lasting. I did set up, along with Lee Schneider, a global policy think tank, which several of you are members of, called Global Blockchain Convergence. And I think right now is really not the time to lobby for what is still, this is capital markets. Crypto's down here like a fly spot. Like its relevance in wider capital markets is so small. But I think in January, we need to be back on the Hill and in front of every legislator we can find, educating and explaining and lobbying for the good that we bring and explaining why we have solved our problems. And we've got some problems.
Agreed.
Okay. So does anyone else have any comments there or questions?
If I could follow up on that, I've been waiting to hear this kind of a question come. Right now, the issues that have to be dealt with are so much more severe than I think we've got to get under control societal unrest. I mean, the upheaval that I think we potentially can see at multiple levels before we even get back to worrying about, do we have a rate of inflation that's so high. It's been interesting because I think in the early days nobody really cared. It was a matter of getting the money flowing so that we could get food into people's bellies and hopefully keep houses, different kinds of buildings burning. So I think that's been the major focus. And I think, yes, education on a going forward basis, but I think right now is a great opportunity for the technology overall to overcome some of the image problems that came early in the Bitcoin era, and show how it can be used to help in a lot of different kinds of ways, in very positive ways. And I think that in and of itself will help us get over a number of hurdles. But the technology, it's a shame that we weren't a little bit further along with the technology than we are when all this hit, because I think there's so many elements of what we're going through today that not necessarily on the monetary side, but in other areas, the technology could have been of immense help.
And I guess I see only good things right now because I agree it gives us more time, and really it gives us the time to make this better, and there's a very good chance that the markets will need this kind of solution, like cryptocurrency. I mean, because like Denelza was alluding to, I mean, with this much influx of cash, how can there not be some kind of inflationary trend? And what is going to become of that? I mean, not to be all doom and gloom, but people will need choices, and cryptocurrencies offer that choice, and we have that time now to make it better and make it more useful for them. So with that, I really thank you all for joining this discussion, for sharing your thoughts, and I hope you guys join us in future discussions, and again, join us online. So with that, I just wanted to share some links for those of you who want to follow any of the speakers, or also follow us online here. And if you have any questions, feel free to reach out to myself. These are our websites, a few of our websites, and I believe I'll also send out the websites and follow information for those of you who attended, for all the panelists. I think there was one question we didn't answer, but I'll have to send it to you in a follow-up email, and that is around where we find the regulation related information. And thank you guys so much for joining. I think there are some other questions here. Actually, there is one quick question on Facebook and Libra. Does anyone want to take it before we just sign off for the final time?
It's
Oh
gonna,
no.
it's gonna die. It's going to die. It was stillborn out the gate, and it caused so many problems. It has clearly been radically rethought, and I think that rethink will be ongoing. But in its original formulation, I don't think we will ever see national governments permit something.
All right. Well, thank you guys. Oh, sorry, another comment. Yes.
No, I was going to say, I said earlier on is that they've redone with their original plan, which is closer to what I thought was going to be realistic from the beginning. I have no doubt they're going to continue forward with it. I think that their timing now is probably even better than it was, 6 months or a year ago. Interestingly enough, I haven't mentioned it this whole time, but when I really took my deep dive into the world of digital currencies was in 2008 as the financial crisis was ensuing. I was working with a gold-backed digital currency system. And if there was ever the right time for that kind of a system, it was then, except it was so hampered by some problems that it had with the federal government. But I think now, that the way this gets managed, and it's not just Facebook. It's Libra is its own association. I don't know how many of you saw Katie Hawn tweeted out the other day about the new structure, but I would say certainly go read what she wrote. This thing's going forward. It's going to happen, and I think in this time, this era, it's actually going to probably provide a really welcomed avenue potentially for distribution of aid, for management of assets and resources. So I think it's actually quite exciting. And I should preface this I should have prefaced my comments by saying I'm not being paid by them, but this is just my view from having been around the space for quite a while now.
And if I could add to that, I think with Libra, the conversation is always so challenging because, what Facebook is building is not a traditional cryptocurrency, right? They have this massive infrastructure where they can just WhatsApp alone can touch the world. But I think the issue we've had over the last year, at least on Capitol Hill, when you have this conversation, whenever Libra comes into the conversation, everything else gets eclipsed, and every crypto company gets judged by Facebook. Even Libra is not judged by Libra because of the baggage that Facebook brings to the table. So I agree with Carol that Libra's infrastructure and reach is tremendous, and with a global crisis is going to play a role. But I think the conversation, when we have a crypto conversation, it's really important to put Libra in the context of where it needs to be so that it doesn't eclipse this whole larger conversation, because crypto in itself is complex, and what Libra is building is very different than the conversation we've been having, but it's still part of the dialogue. So it's important to do the research there, but I think I agree they're going to be extremely successful, and I think that's one of the reasons Mark Zuckerberg even announced they've canceled all events until June of next year, because they have a plan.
Okay, is Libra a separate company still, or is it now part of Facebook completely? What's the status?
Libra has always been a different part of Facebook, and you can actually go on the association page and read their white paper. So, but obviously it's very hard to detach Libra from Facebook, but what they built was a separate entity.
Okay, so if I were to buy the stock, I would buy a Libra stock?
Well, you see, this is where the conversation gets tricky. There's Facebook stock, of course, because that's a traditional company. Libra, what they're building, first of all, they haven't created the the currency that they're proposing. I think the Calibri wallet is actually, in development, but at this point, they're still building a product and they're still going through the regulatory hurdles. So when you're looking at Libra, I think for whoever's out there, it's important to do your research. There's not a product that you can invest in yet.
Right. Okay, thank you.
And Demelza just said Libra is not planned to be publicly traded, so you will not be able to buy a Libra equity stock, just to clarify that further.
Okay, that's good to know. Okay. Okay. Well, I was also interested in the fiat question versus crypto taking over. I don't see the incentive for governments to let crypto take over unless it's really driven by the people, and I don't see that happening either. So I hate to be so pessimistic, but I'd like to know why. I think it's Karen. Why you're optimistic?
Oh, yes. So I think this goes back to um, people wanting options. And in this, what I've found is, especially with each new generation being so much more used to having multiple options, um, a payment type is going to be another option that they want, and they'll want to continue to have. And so for me personally, traveling internationally is such a pain if I'm using credit cards or cash, just because of the high fees, the costs,
Hmm.
the delays. And even when I'm dealing with customers, suppliers, partners, it's by far easier to use cryptocurrency than it is any other payment method. Um,
Hmm.
and I know, of course, in the US it isn't. But so I just think, as a society, we have, first of all, moved in the direction of more options, and that includes payment options. And then I do also agree with um, Demelza and where she was going, and that this situation now with all this flood um, of money, of government printed money, is worrisome. And you have, on the other hand, um, things like Bitcoin, where there's a limited supply, and it has been called the digital gold or whatever for a reason. So I think as soon as this sort of emotionalism and the
Hmm.
talk dies down, um, people will return to some kind of economic sense. And anyway, that's my
No, I agree. Yeah, that makes sense if the education and the ease of use can be a bit more transparent. Right now, I feel like I have some wallets and I just find them really burdensome to use.
Yes.
So.
Okay. So that is why I completely think this time that we have is awesome, because I agree that there's a lot of usability issues that need to be worked out.
Mhm.
This is the time we have to work them out, because fundamentally, the technology and the principles, I do think, work and they make sense. But yes,
Very
you-
user unfriendly
yes,
and not transparent, and that's what upsets me about using it. So because they're not transparent, you don't know what, once you make a transfer, what really happens. So I've bought and held because I'm not sure if I sell, how it's accounted for. So it needs to be more transparent.
yes, and thank you for saying that, because I feel like you just became the poster child for our series here. The whole subject of this series of events that we're doing is around transparency, and increasing that transparency, not only with crypto as a form of payment, but also in the trading, like you talked about. So thank you.
True.
We are
And
going.
yeah, and ease of use, and like it's easy to use the bank. It should be easy to use crypto too if it's really gonna make an impact. And I agree with you. It's the time to do this because people with this virus, people are not going to want to handle cash because cash, so digital, it's really the time for fintech or digital assets or blockchain or crypto to really make an impact. But
Yes.
anyway,
So
thank you for organizing this.
yeah. Yes, thank you. And please attend our next sessions, because they'll be specifically on transparency in capital allocation, transparency in trading, and we'll have a whole bunch of other folks that are just amazing and experts in this area talking about how you can reduce risk in trading and exchange of digital assets and the tools you can use.
Yeah, but reducing risk for the for the at the consumer level, that institutional risk is not so important for me right now.
Yeah,
I think
no.
yeah.
Exactly.
Right.
Reducing risk for the
Okay.
consumer, for the client.
Right. That's the only way I see it going forward. Once there's ease of access, a lot of people are excited by it, but they don't trust it. So there's a lack of trust, because, and it goes back to what Cleve said with regard to lack of education and so on and so forth. But education may not be enough if people don't understand it. And well, yeah, I guess with education they'll understand. But in any event, thank you.
Yes, thank you. And yes, and please join the rest of the series. We're all talking entirely about trust and how to improve that. So I know we went late, but thank you all for your questions. I really appreciate your feedback and your thoughtful answers here. So again, I encourage you to join the rest of our series. We'll send out links on how you can do that. But in the meantime, stay online, stay close. We're on Telegram, LinkedIn, Twitter. So find us and keep the conversation going. Thank you.
Thank you.
Thanks, Karen.
Thank you.
Thanks, ciao.
Okay, thank you all. Bye.
Thank you, Karen.
Okay, yes, you're welcome. Thank you.